What's going on, family? Back at it again with another video, getting straight to business. This is dealing with the New Zealand economy. Let's zoom out to the higher time frames. As we can see, this is definitely on a down path situation here. This weekly candle finished bearish. This is bearish engulfing. It broke out of this consolidation. Now, I know we had a monthly support, but also dealing with the dynamics of the economy. We probably could see this push a little bit lower. There's a lot of uncertainty going on with the just globally in general. And so right now with Australia and New Zealand currency are more on risk on type of currencies, right? Meaning that investors, when everything looks pretty good, they don't mind risking capital to gain more. But right now, this is not a risk on economy right now. It's a lot going on. So I'm looking for possibly that price might come back up to here where it broke out at and shoot back down. We will see how price reacts. Or it can just come back up to here and shoot back down. So I will have to see how price actually reacts to this point. Right now, I just feel like the demand for the New Zealand dollar is pretty weak, to be honest with you, right? So looking at the manufacturing sector, some of this is still old, waiting for it to come out. Right now with the manufacturing sector, it was looking pretty strong. The supply is coming back into better balance with demand in this economy. But though even is improving, it still faces challenges, right? So it's not necessarily, and when you see some of my notes, it's not necessarily growing neither, which is pretty bad. But the reason why it's being saved is because, or why the New Zealand economy is not going too much down to a shithole, excuse my language, is that it's now the output of New Zealand can keep up with the supply because the global demand is been going down, right? And which I see that here, but productivity still faces challenges in one of the articles, and it did pretty good. Got back in it huge bump. The reading underscores continued struggles in the manufacturing sector, despite recent RBNZ rate cuts, weakness across production and employment indicators. So keep that in mind. Coming down to the services and composite, looks pretty good. It was definitely pretty strong. And we know what this is dealing with. This is possibly because demand is in better balance with supply now, with global demand dampening and productivity, however, still faces challenges. So what it say? The article said a closer look at components reveals a mixed picture. Now, we've seen that with Australia, too. It said, noted that the PSI reflects stabilization, right, rather than an elevation. So though even we seeing this temporary bump like that, it's improving, don't get too carried away because it's not necessarily saying that New Zealand is getting better in their economy. No, they facing some challenges. Highlighting that while the upward move is a positive sign, the sector is far from a robust growth. Now, business confidence, how the business is feeling in New Zealand. I feel like they are feeling a little bit optimistic, about the projections for the future and outlook states of the economy. I'm just monitoring this. An article said, highlighting that while sentiment is improving, actual activity remains uncertain. Noted that the economy is on the path to recovery, supported by lower interest rates and stronger than expected commodity export prices. However, the bank cautioned that the next phase of growth remains a point of debate. Pace of expansion will depend on household perceived current interest rates, the extent to which global uncertainty influences business investments, and whether firms push forward despite challenges. Additionally, potential labor shortages could emerge as a key constraint on further growth. There's a couple of things that they said here, right? We got to look at pretty much consumer spending, the commodity export prices is upholding New Zealand dollars, so that is a positive thing. Um, but also the global economic outlook is so uncertain in how it will affect business investments, right? So we got to keep all this in mind. And labor could emerge as a key constraint on further growth. If demand is coming back in better balance of supply in that economy, and they're not supplying either because of unemployment, labor shortages, huge sell off, which I'm gonna be looking at. Huge sell off. Alrighty, coming down to the consumer sector, you see some of this is old. Now, electronic retail cards. This is dealing with the trends, spending trends across retail sectors. Okay. So my thoughts, possibly consumers are not confident about the uncertainty and weakening of the New Zealand economy. So pretty much the same, but it's in negative territory. It got better, it got better. But month over month was weak, right? So keep that in mind. People not looking to spend. Now coming down to the credit card spending. Okay, this was pretty strong. Flip side. Now I live in America. Our credit card debt is crazy. People live off of debt, right? So keep in mind is consumers spending their credit cards more because they need it, right? Because they don't have the money. It's a flip side to that, right? Could be healthy. It could be bad. You have to look at the overall picture. And so I'm going to be monitoring this. So I said my thoughts, or possibly consumers are not confident their economy of their economy, and could be possibly leaning on credit cards for their everyday living. Possibly. So I'm monitoring this. The ANZ Roy Morgan Consumer Confidence. This measures consumer confidence across the New Zealand household and how this affects their spending behavior. Pretty weak. So it's not resilient as it was more than the previous, but pretty weak, right? And this is the second time it's been pretty bad. Decline since New Zealand has weakening. So consumers feel pessimistic about the state of the economy, straight up. Now coming down to the labor sector, got to get some updates there. Trade partner sector. Let's see. So this is new. This is bad. Negative. Exports has went down. So China get hit. Either China, Japan. So this is bad right here. Imports. They're importing more than they export, and that can be a bad thing. So an indication of a slowdown in the economy, as it may suggest that consumers are starting to spend less on foreign goods and services in other countries. So I will still be monitoring to see how tariffs can impact this data. I do see that here already. So I'm going to keep on monitoring that. Let me see. You ain't going to put a score there, but I'm going to be monitoring that. Commodity sector, global dairy trade went down, possibly dealing with the trade wars. China demand is messing up the economy. Now central bank sector, the only one right here. Let me see. So if economic conditions continue to evolve as projected, the committee has scope to lower the OCR further through 2025, meaning cut interest rates throughout the year. Now, according to the latest projections, the OCR is expected to decline to 3.1% by the year end and remain at the level until early 2028. Wow, right now they cut from 4.25 to 3.75. Right? It expects growth to recover in 2025. Okay, that's something to look for. Now, driven by lower interest rates, encouraging spending. So they want to encourage spending for their consumers and their economy, right? However, elevated economic uncertainty is likely to weigh on business investments. The bank also noted that inflation is expected to be volatile in the near term, influenced by a weaker exchange rate and higher petrol prices. That'll be interesting. So I might have to take a look at oil, y'all. You feel me? This housing sector, this is old. We didn't look at what will make. Maybe I'll do that in a different video. That's fine. Upside risk, downside risk. Stronger than expected commodity export prices would be good for New Zealand. Lower interest rates, which would alleviate consumers and would encourage spending. Oil continually declining. Manufacturing PMI increasing, which helps productivity growth and supply. This what will have, besides the market environment, will have the New Zealand dollar to appreciate. Now, what will be bad for the New Zealand dollar in the downside risk? There's with the China economy, there's a lot of uncertainty around the global outlook at the moment. Policy unpredictability could lead to slower growth. So, consumer confidence declining constraints on further growth. Labor shortages, unemployment increasing, constraints on further growth. GDP decline further, which entails low economic growth. Global economic conditions increase, dealing with tariffs worsens, which will cause RBNZ to cut interest rates. And this could scare away investors, to be honest, as well, because they like riskier investments to gain more profit, right? So, two-edged sword there. If retail sales decline, which is the opposite of what the RBNZ is Reserve Bank of New Zealand, by the way, is expecting. They are looking to encourage consumers to spend since they cut interest rates and exports drop to China. Excuse me, y'all. Not too shabby now. Notes, key threats stem from global tensions involving Russia, China, and the Middle East, which RBNZ may incorporate into next year's solvency stress test. So this is kind of old from 2024, but I kept it here for a reason, because we're in this environment now. May allude to risk of a major disruption in China, attempts to assert territorial claims in the South China Sea, or to use force in the Taiwan Strait. Now, the RBNZ flagged concerns and warned that the higher global tariffs could slow growth in key trading partners, which we were saying China, dampening demand for New Zealand exports and weakening domestic economic momentum over the medium term. So so it's going to go down more. That's what I'm expecting, but I'm going to be looking at key data to solidify that, right? Now, go back, New Zealand. Some of this, man, we might have to skate over because sometimes it can be long. Now, or he's the central bank person. He said he reaffirmed that a 50 base point rate cut will only happen again in the event of an economic shock. Right? So we're going to be paying attention to the global outlook of everything. He said reinforcing the central bank's guidance for 25 base point cuts in the first half of the 2025. This is what they was talking about from last year. See if that be fulfilled, their projections. Express optimism. I've been seeing this with Australia and New Zealand. I wonder why. Right? That's my way of thinking right there. Stating that GDP growth, employment growth, and low stable inflation should support an improving economic environment throughout the year. This is what we should be looking at. Also looking at other data that come out with countries that complement them. Excuse me. However, he warned that the geoeconomic fragmentation is weighing on global growth, leading to increased price volatility in international markets. So, escalating trade tensions will contribute to higher inflation, weaker global growth, and reduced economic efficiencies. So, we're going to have to keep all that in mind for New Zealand. Right now, I am not going to be looking for no type of sales until I get a decent pullback, which, if anything, I will probably draw like a Fibonacci level to see where a decent pullback would be at, right? But until then, I mean, could be here, 38.2, because it's touching this daily line, or it can pull up a little bit more in here. But again, we will see how that goes. And that is my breakdown for the New Zealand economy. See you in the next video. Peace. One love.